Good morning, traders. Hope you guys are all having a great weekend. So today I'm going to be going over just going to be specifically looking at SPY and the overall way that I'm seeing the markets pan out for the week and Monday. So let's get right on into it. So the big thing I'm going to be watching on Monday in terms of levels is going to be, I'm going to be watching these two orange lines for a gap fill play. So if price ends up snapping back, I'm going to be looking for a price to come to 430.76 and to 422.66 all the way to the high of this one of 423.50 and the high of this one, which is 431 roughly. So I'll be watching 430.76 to 431, and I'll be watching on this one 422.66 to 423.50 on this one for a gap fill trade. I highly doubt that we're going to move. I mean, maybe by weekend we could move down if we end up really snapping back. Now, the big thing to keep in mind for this week is going to be if we end up continuing to rally and we break down 437, we need to hold 437 in order to push up higher to 440 and 444. If we end up holding 437 on the daily and we end up treating it as a support level and hold it for at least a day or two, I think that you're going to see more upside. But the big thing I want to mention is what I've been looking at for the past few hours I'm trying to look at price action throughout the history of SPY and SPX and figure out this large gap right here, how we have multiple gaps up, if we have ever had price action very similar to it. And the only spot I can find it is right here. As you can see here, 9.7, 9.8, normal price action, but then we gap up twice. Now, you could argue that different market environments, different price action, but one thing I'd like to point out is the volume is relatively normal as you do push higher up on SPY from 9.8 to 9.9 to 9.12. This is 9.12 of 2022. So we had three gap ups right there. Now, if you compare it to this time around, it's a little bit more of an extreme gap up, but nevertheless, it's on average volume, but you're increasing greatly in price, meaning it's more of a bearish divergence. So the big thing I'm going to be watching for this week to see is if we end up getting a push upward, then, I mean, eventually we have to come back down to the gap, but if we push upward, then watch 437, 440. But if we end up snapping back, which I think, in my opinion, I think is a pretty high probability considering the candle that it's giving us right now, is a little bit more of a sell side candle than anything. I wouldn't call it exactly an inverted hammer because it's half body and half wick. I would like to see the body a little bit lower in order to consider an inverted hammer. A better example would be something like this as an inverted hammer. Even that one's a poor example, but it's better than this one. Now, the big thing to watch would be if we snap back, watch 430, 425, and 422.66. I would not be shocked if we get that. I'm just preparing for either scenario, but as always, you got to just trade the price action and just let the market do its thing, and you just make money on trading that. But hope you guys have a good luck this week and have fun, traders.